Buying stocks is just the first chapter. Today, we explore what comes after. When should you actually sell? Stay tuned as we break down the real reasons that might prompt you to press the sell button and secure your profit. Many of you might have heard the saying, the best time to sell is never. While holding long-term is a great strategy, there are definitely times when letting go of a stock is a smarter move. Let's dive into the top reasons why you might consider selling. Let's start with the big one, fundamental changes. This doesn't happen often, but when it does, it's crucial. This is probably one of the hardest to see, as sometimes the fundamental change might not be from within the company, but from outside the company. Take example Blockbuster. With the advent of streaming, consumer viewing habits and preferences were fundamentally altered. Another was BlackBerry, when it refused to follow consumers' preference to when Apple launched their first iPhone without a physical keyboard. I would also include in this category when the main reason you invested in a company is no longer there. This might be the case with Boeing, which was a stock market darling due to its strong market position, history, and innovative technology incur a significant loss of trust when two crashes involving its 737 MAX aircraft. I personally held Boeing after revelations of safety oversights and regulator mishandlings were revealed. I dig deeper into the company and I found that I did not agree with how it decided on which product improvements it should pursue. It was reason enough for me to sell the stock. Next up is rebalancing. Now, I'm usually the type to let my winners run, often adding more to successful stocks. However, imagine a stock becoming 70% of your portfolio. Sounds great, right? But it's also very risky. There was a time when a booming tech stock made up a huge portion of my investments, and deciding to trim it back was tough, but necessary to avoid potential disaster. Overvaluation is tricky. As the saying goes, markets can stay irrational longer than you can stay solvent. Take Zoom in 2020. Its value soared to over $100 billion on less than $1 billion in revenue. That price to sales ratio was over 100. Even though I had been invested in the company and thought that it was the market leader in web conferencing software, it was difficult for me to imagine on how it can satisfy that valuation. That was my cue to sell. Sometimes it's not about the stock being bad, but about finding something else better. I often sell underperformers to free up capital for more promising opportunities. It's like cleaning your house. You make room for better things. This strategy has consistently kept my portfolio fresh and growing. In fact, in general, every year, I reviewed the performances of all the stocks in my portfolio as if they were employees in my company. If a stock does well, I would add money to it, while if a stock has not been doing so well without a good reason after a period of time, it would be a good reason to sell. Real life dictates a lot. Whether it's buying a home or funding a wedding, sometimes you need cash, and your investments are there to support you. Planning is ideal, but life isn't always predictable. I've sold stocks to help fund my first home, and though it was tough, it was the right move. One approach that I like to take with these larger purchases in life is not setting a timeline of when I need to purchase them, but instead set a market condition during a certain range of periods. For example, if I want to buy a house, I would try to buy when the stock market is up rather than when the market is down. And finally, taxes. Strategic selling can help manage your tax bill. Each year, I look at the gains and losses, sometimes sell losing stocks to offset the gain. This maneuver is often called tax loss harvesting. What this does is you have gains during the year or from prior years. The loss that you take from selling a losing stock is able to offset a prior gain, thereby lowering your taxes for the particular year, or even get a refund of a tax that you had paid in a prior year. It's a practical move that allows you to get near-term benefit from your losing stocks. But before we wrap up, I would like to remind people a quick reason not to sell. Don't react to market pullbacks or crashes by selling. These are often great buying opportunities and the worst time to sell your stocks. As long as the fundamentals of your investments remain intact, stay strong. Please note that I may have positions in the stocks discussed in this video. Do not buy or sell any securities based solely on what you hear in this video. Always do your own research or consult with a professional before making any investment decisions. That's it for today. Knowing when to sell is as crucial as knowing when to buy. Each situation is unique, so consider these factors carefully before you make your move. If you found this video helpful, please like, subscribe, and hit that bell icon so you won't miss any of our future discussions. Share your thoughts and any questions you have in the comments below. Happy investing and see you in the next video.